Hello, hello everybody. Hello, hello, hello. Let's get this show on the road. Hello, Brad. Hello, Gene. What are you sad about, Gene? What? You becoming a 4-year-old child? What? The market is doing exactly what we said it's going to do. It's going to close the gaps. What are you sad about? You should be happy. Hello, hello, hello. Thank you, Judy. Safety is a very relative thing here nowadays. Um, Sadly, I mean, I'm hearing jets non-stop, to be frank, and it's not all that comforting. Hello, Andre, Leo, expanding. Hello, 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 everybody. I mean, safety is a very relative thing in Israel under, everything how it is. It's, none of us are truly safe, if I can call it that. Nannies, thank you very much. Yeah. No, I agree. People should definitely smash the like and all that beautiful stuff. That would be tremendously appreciated. But then again, not here to force anyone to do anything. If you guys don't want to smash the like, don't. It is free. It's not gonna cost you anything. Now, let's get into business. Again, those who know what's up, and we spoke about this on the last live, we said how it's far more likely than anything, given where we are, given the fact that we're that close to closing that gap, that we're basically in the process of closing this gap. Hello, Chubby. So we close this. Now we've done with this. So now gaps are done. Almost technically speaking, we still have the leftover from this from the morning, which probably will get closed very, very shortly. So not all that surprising. We actually got really what we've expected. Again, a tiny slide through, nothing all that abnormal. We can probably see that was a retest of that particular level right there, which is probably some interday. That is not all that important. On the momentum, on the 1 minute, it's not not all that important. Sort of showing that we're gonna be retesting that 5722. Nothing all that crazy. Again, the market is having a very slow turnaround, and we're just the people who don't have the patience, rather, don't understand what's going on, and it might seem like lots of various things, but really what it is, it's just a very, very slow turnaround. Again, you cannot escape what is inherently, inevitably going to happen on the larger time frames. People always come with hope, thinking, no, but I wish it too, or it seems like. The reality is the reality, and this is why the technicals in most of the instances end up prevailing, simply because it is almost like an avalanche effect. Once it starts, and once it's visible, everybody else sees it and plays upon it. It's a little bit more of a sort of psychological element to things, but that's just how things work. Now, 5 minutes, we know, well, again, at face value, right now we're having convergence, but at the same time, face value, we're going downwards. This might reopen again, given the next candlestick. You see, as it's actively reopening, it's readjusting based upon the data it's receiving, basically. This is set basically to a short-term range because we're in a 5 minutes, so thus we're getting that very reactive structure on the momentum. This is why we prefer to go to things that are a little bit more stable, a little bit are kind of already set. So bullish momentum on the 30 minutes. We spoke about this a little bit before, and we said how more likely than not we're gonna, of course, go into overbought territory, test it for a little bit, which gives us the credence of that 5722, retesting it, even if going slightly above. That's all normal. We're basically boiling the crab, allowing the institutions to unload at higher prices. In reality, if you're attentive to the individual assets, what you're going to realize that the prices don't change all that much, right? If we're going to look at all the individual assets, most of them are still, on the grand scheme of things, are in a drop. Tesla, as we said, and I've actually mentioned a little bit about it on the Discord last week, and I said how, look, This is bullish, but what it is on the grand scheme of things, it's inescapable that it's far more bearish. And basically, yes, the short term looks very great, but on the grand scheme of things, it is getting ready for a drop off. It's sort of this in between correction. We can see that phenomenon on various time frames, but when you look on the grand scheme of things, big picture, again, just step far enough away, you realize we've been retaining this longer term trend and resistance for a very long time, pretty much since October 21st ish. Every time we got to test it, we got rejected. Right now, we just coincidentally opened up a gap very conveniently on the range of it. So this is also on the range where we test that actual resistance. And so we ended up getting stuck a little bit in that range, but still are being retained by the overall grand trend. We've seen this before, by the way. We've seen this on the shorter time frames. I've shown this before, how it's being carefully retained, although we slip above right now. That is not an abnormality. All in all, we're kind of within the acceptable ranges. And there are various other supports and resistances we saw before that are being retained based on the same principle. Thus, we know they're basically correct. Now, so all in all, what it seems like they're doing basically right now is taking advantage. Well, plug has nothing to do with this. It's more of the energy play, which, by the way, oil is back above 71, but it's not all that abnormal right now. What we're seeing is basically a retest of what was ceiling now as a floor. It's, of course, a gradual process with a big reserve that was found not far away from Kuwait. We know that a big reserve, of course, put a dent on that energy momentum, that bullish momentum on energy, but all in all, it did not stifle it, just temporarily made it subside, but otherwise it's still ongoing. Market is still very bullish on energy. And we know when energy goes up, everything else gets more expensive. When everything gets more expensive, normally that's acceptable. It's unacceptable under the conditions where we're at right now. That is the problem. Inflation and so forth, interest rates and so forth. So let's get back to the S&P, because that's what we really are all about here. 45 minutes. At face value, bullish, but we understand that this is an in-between process. Really, it is bearish, but let's call it what it is. At face value, it's bullish. This is why we're getting this breather. You can almost, funny enough, you can see and recognize this actually goes directly into what I spoke about earlier, how this is somehow equivalent of this, right? And the reality is that actually this time around it sort of played out exactly as I'm saying. But what you're neglecting to see is basically this entire process, or rather this process, right? This entire piece. So basically this is almost, don't neglect to see how the overall bigger picture of things work. Now, let me just clean it up a little bit for ya. Let's go now to 1 hour. This is where things get really, really interesting, because the 1 hour, as we said before, gives us a little bit of a longer duration and perception that allows us to actually extrapolate, well, several sessions ahead. To be frank, if you know how to use this right, you can actually see the entire session from this, and probably a couple of sessions, or at least a hint of what the upcoming sessions are going to be like, but definitely very easy to interpret the current session. So the current session is definitely implying that we're bearish, although having some stuttering in between, basically a little bit of a breather, if you will, something similar that we have on the upside. That's normal, right? There's this crossover, the forces basically break down, but then we continue on the grand scheme of the trend. Why do we think it is bearish? Because we spoke about this the entire week last week, how we were getting ready for the 4 hours to start breaking downwards, basically giving us a hint towards that daily that is completely overblown, and we expected it to break prior to, but actually we went into overbought. Why did we think it was going to break down? Because of the weekly. On the other hand, what we got here is another crossover. Basically, the forces right now, what you have is this temporary bullish momentum, but then again, if you're objective about it, you realize it is temporary. Why temporary? Because of the monthly. We said this before, I keep on repeating this. There's nothing we can do about this. There's no way to prevent this from falling off the cliff eventually, right? It's only a matter of time, right? We can postpone it a week, we can drag it out a little bit longer this way, we can drag it that way, for this reason, for that reason. At the end of the day, This is inevitable, and we're basically 7 days away. We've been talking about it throughout the entire month and getting ready for when this process starts and when it will, which is basically right around the corner. And people kept on asking me, Greg, market crash, where's the crash? What you need to understand, and if you've been seeing and know anything about me, and there is no what kind of analyst and predictor or the ability to read the market you have if your ability is within being able to say what the market is actively doing right now. That is being kept in hindsight, okay? I mean, I have eyes. I can literally see what the market is doing. I don't need you to tell me what the market is doing. So the trick here is to be able to forecast, to actually see things ahead of time, right? So if I would have been hyper focused on trading right now, or more so, I would have been able to sort of show you how this process slowly switches over. And this is what I'm trying to do in these videos, is actually show you that although the market can indicate one thing, it can take a very long time until we actually complete the process, and how much the market can stretch over beyond the expected measurements, even under particular sort of abnormal conditions. Why abnormal conditions? Because let's be frank, the market right now is rather abnormal. Economic conditions are abnormal, geopolitical conditions are abnormal, supply chain is still broken, everything is still as is. And I'm not even mentioning the real horrific stuff that is going on everywhere and anywhere. I'm of course not talking about how the Middle East here is basically on fire. There's so much to talk about, but all of that would be speculation, and we don't want to go there right now. We're looking at face value, what the market gives us, right? So we said the monthly is basically inherently going to become bearish very, very shortly. Once it does, we're going to feel the full brunt of that correction to the downside. So very shortly, boys and girls, just be patient. This has not readjusted. Of course, this will be readjusted within 7 days, similarly to that monthly chart. Then we're going to have a readjustment of that, and we'll see whether we're going to continue, or are we getting ready for that crossover? Is it up to come very shortly? How we said again, don't be surprised if there are slight deviations. The market is basically a vehicle that is being controlled by the entirety of all of us, the sum of all, traders and institutions and everything that's going in the market. So precision is not exactly our strong suit. And it's not because individually we don't have precision. It's just as a whole, when this mechanism is being controlled by everybody all together, no, don't expect precision. That's kind of to put that. It's very unlikely. This is why precision is acceptable and far more likely and happens when we're talking about smaller time frames. This is where you have a smaller group in control of a particular movement, if you will. But otherwise, when we're looking at the bigger picture, of course, the further out we go, the less precision, or our standard deviation will basically inherently, even if we're talking about a certain percent, that percent will represent a different number, a larger number inherently. VIX also, people are wondering how come we had that action. Is because in the in-between we had a bit of a gap open up and we had to close it. Now that we've went down and secured this particular partition of the gap for all the bots perceive, we're basically back to zero. So now we have the leftover gap right here on the top side of things. This part, this part basically, from what we've closed already to the part that we haven't closed yet. So we have a bit of a gap here to close. So the market inherently is going to try to take it upwards on the VIX. If VIX goes up, volatility goes up, volatility goes up. Usually, volatility does not represent necessarily bearish movement. It represents the market can have a larger change in price in both direction. Really, it sort of expands the standard deviation to if that makes sense to you. That to put in really simpler terms. But at the end of the day, remember, this can be conquered within 20 minutes, 30 minutes, an hour. So what's then, right? What's then? What's then is what we see on the indices, on all of the time frames, at all the relevant time frames. For the half year, we still have 3 months and 9 days. Those 9 days that we have to complete the months. So this at face value looks it looks inherently bullish. But we know that the bigger picture is a little bit scarier, and actually it's bearish. It's just taking its sweet time, and only when we the closer we get to oversold territory, and the more we're going to get amplified by the oversold territory. These processes, as we said, take several years in most instances, doesn't matter how you look at it. One way or another, basically, these processes will take quite a while, and once we complete this process and get into oversold, this is when we're going to get the full brunt of that correction, that recessionary movement that I'm suspecting that is in the cards for us. All right, I think I've been able to run through everything and explain everything rather coherently and swiftly. What now? Let's go to the chat, boys and girls. Let's see, I'm not missing anything. The chat looks very, very quiet to me. Maybe I'm wrong, or look, my chat has died. But yeah, that's it, boys and girls. Now that we ran through all the time frames, let's get back to the smaller view so we can see. Coincidentally, wink wink, magic, right? I mean magic, right? It is quiet in the chat, I agree. Boys and girls, Nanny's posted the link to the Discord, and I believe, yes, that's the Discord. Don't forget, you're going to have the links to the Patreon and all that beautiful stuff if you want to take part in that, and if you want to become a full-fledged member to be able to participate in the Zoom calls, hangouts we have on the Discord every single day, most days, of course, and I'm there as well. So, yeah. Boys and girls, feel free to join us. Although I'm suspecting, due to the amount of people we have, it's mostly our own people here. So, and none of it is really doing anything right now. If I want to be tremendously objective, the market is just, this is sideways. Chris, I'm sorry, this is sideways. This is, again, objectively speaking, I should be saying anything that, you know what it is, how the people who have a bullish position, the market moves 1 cent up. Oh, that's it, I'm right. You see, the market's going up, right? We used to make fun of this, and this is almost like a child that is super reactive and impatient and just very emotional, if you will. This kind of goes in the direction of what I'm saying, towards the 110, but this is nothing. If we want to be objective and, again, put it in a framework of something, of some sort, right, we're going to realize that it's basically in a channel, and this movement within its entirety, moving downwards, retesting the same level, that's normal. That could be absolutely meaningless. We might as well retest back to 118 before we actually continue to the back to 110. That's just kind of how it is. But again, this is why we're not looking at the granularity of things. We're not hyper focused on that. We're more focused on the fact of the matter that the trend has been retaining downside momentum for a very long time, even if moving to the upside, right, to retest these resistances. But this is normal. This is a normal process. You see this almost gradual breakdown, and that even the angle starts to appear. We don't know. Maybe it's going to shoot up and meet that resistance again. But for right now, as is at face value, it's hinting that even the angle is starting to change. We basically went from a clear uptrend to an almost this sideways trend with inkling to the downside, right? You can see it sort of being more magnetized to the downside rather than to the upside, right? Because it has a clear resistance. And then, unsurprisingly, so it even starts to break even further, because the breaking of that momentum drags on, and the further out it goes, it just runs out of momentum to sustain itself. Basically, runs out of fuel, out of money, if you will, and you end up with more selling than buying, and this is what you get in this sort of position. Patreon is great value at $10 a month. Currently 53 spots left. Mama, not even 53. It's less. It's not updating well. There's like 45 spots left, I think. 45 or 44 even. And once it's full, it's going to get locked for a while. And the only way to join our Patreon minimum level would be joining on Tom's Patreon, which is $20 a month and gives you exactly the same privileges and benefits. So that is very important to know. On the other hand, if you are interested in taking that one final spot I have in my academy, don't sign up for the Patreon, because being a one-on-one academy member of mine, a student of mine, gives you all these privileges and then some. All right. Well, that seems like the market is trying to tug to the downside, but is that certain that this is it? Well, arguably we don't know. Again, we want to stay objective and not too impulsive because the market went 1 more cent to the downside. We want to stay more focused on what the market is really doing. And this is why we don't look at individual assets. We're most of the time focused more on the indices because the indices, their carryover effect is very important. And well, basically this has a lot to show for what we're seeing on the individual assets, if you will. I see we don't have a lot of questions today, boys and girls. Um, what's going on? Have you fallen asleep? Nannies, thank you very much. Boys and girls, those who are not aware, I'm awake. Chris, I feel like my energy made you all fall asleep today. Why? Me being tired, I'm sorry, boys and girls. I have worked through the night helping new members, get their roles set up and whatnot. I do a lot more for the community than most of you realize. We have at times, 5, 6, 7 tickets open at the same time. More so, it's not like it's been really, really quiet here. So you have to forgive me for being a little bit tired. It's not like let's not forget, I kind of live in a country that is in active war, okay? It's a little bit difficult sometimes. I am trying to do my best. I do live in the center, which is pretty much the safest you can be. In fact, those who know, I live in the utter center of Israel. Pretty crazy. But it doesn't mean that I'm all in all 100% safe. That's the sad reality. Palantir is impressive. I cannot say anything about Palantir. This is just phenomenal. What is going on with Palantir is that the institutions basically I'm fairly certain that myself and the institutions are on a similar page, if not on the same page, if you will. And because they have a lot of holdings, they are quietly unloading, which with the very low volume, it's very easy to do and result with an upside price, allowing them to further unload, and you guys basically picking up their bags, if you will. I hate to say it this way, but it is what it is. And it's not like it's a bad thing if your perception on Palantir and you're waiting for Palantir to get to its, hundreds, and we'll see what's going to happen later. Basically, grow with its market cap to a $1 trillion company sort of thing, and so forth. Right, become a big thing. Eventually, at some point, compete with the big boys, right? Then it's going to be a real price to talk about. Right now, it's all in its peanuts, so it doesn't matter 37, 25. That's just and I'm not saying that again because I have any bias. That's just the reality. I've said this before. This is how I kind of ended up being friends with Tom. Those who know, we met during a very particular time several years ago. Online basically, and the reason I really took favor to him is because he was able to see something very similar I was able to see about Palantir. Okay, we were both waiting anxiously for the company to start to go public, of course, and that was all in its diaper stages. A lot of water went under that bridge since, but that's how we got to become friends. So yeah, Palantir plays a big role into how Tom and I know each other. All in all, pretty impressive, but still it doesn't change the supports and resistances that we're very well familiar with. The very next one that matters is that 40.37, which I highly doubt we're going to see. This is, if we look at what the indices are doing, it's going to be almost impossible to make it that high on the indices, allowing Palantir to continue towards that 40.37. In fact, I think the institutions themselves right now looking at this price and are surprised that they were able to drag it out that far. Or the bigger traders. There's plenty of traders that are not known and command a lot of liquidity, and yeah. So these could be these people. They could recognize the opportunity and playing it out. That is it. Again, remember, there's a reason why we follow the indices. They basically, Thomas, ha, 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 we have Tom in the house. The indices are the main guideline. They're like the what dictates the true rhythm and flow of the market. So as much as we like what we just Tom, I realize what Tom is reacting to, the good positivity about Palantir, eventually, sadly, it will subside. But then again, what we said in the beginning of it all, that there is no bad price to buy it because of what the actual potential of the company, how much of a staple it will become over time, and when it will. I mean, yes, I know. Yeah, why you should not be buying more, buy more, buy more. It's not me again, Tom. You know better than the rest here. When the market was bullish, I was bullish. When the market, even nowadays, when the market is showing bullish signs, I'm openly saying that it's going to be more bullish than bearish. All that I never exaggerate one way or another. I try to avoid biases very much so. I just present what I see. I wish I bought more. Chris King. Well, you're gonna have the opportunity to buy more, I think. By when the blood is in the streets, even when the blood is your own. Very well, nannies, boys and girls, read Nanny's quote right now that she quoted Baron Rothschild: buy, buy, buy when the blood is in the streets, even when the blood is your own. Very important. People oftentimes end up hyper focused on themselves bleeding, and then they look back and said, oh my God, why wasn't I buying? Because you were far too busy with, crying on about your own wound instead of being busy with what you can do with the circumstance. And always when people look back, ask themselves, what am I crazy? Why didn't I buy? And it doesn't make any sense. And that's the problem, to be able to think counterintuitively at these very difficult times, right? So more so, if there's anything you should be able to learn from Tom, then this is kind of the pinnacle of it all. When it's down, don't be sad, be happy. Know that for you, it really does not matter. Instead of almost like letting all these opportunities go by you, make the most out of them. You're going to feel the pain anyways, whether you're going to buy or not. But if you're going to buy, at the end of the entire process, you're going to be very happy. It's never a bad time to buy good companies. Exactly. You see, this is what Tom and I try to tell you guys. Yes, there is this completely separate realm of trading, which should not be interfering with the people who have a mindset of an investor or a long-term trader, if you will, somebody who's, planning to stay in the company for years to come, right? You should not, if you have the trading mindset, sure, you can have that, but separate it. It can need to be completely separate from your mindset as an investor, as a long-term trader, as somebody who sees the actual potential in the company and understands how great it's going to be. Even myself, Tom is actually saying very correct. I'm myself, and most of the time, I used to day trade, yes. Right now, I don't have the liquidity for it. I'm far too focused. But myself, Tom is very correct. Most of my trades are swing trades, and are longer duration swing trades more so. Like there's a spectrum for it all, and I stay on the longer side of things. Okay? So, guys, you need to understand when we say these things, you need to really take them in proportion, understand what it is that we're trying to emphasize based upon what methodology. Okay? Read it again, Greg. Greg, you a swing traitor. I'm not a traitor. Shame on you. Then Venmaru. Venmaru the fool. Why the fool? I hate the self-deprecating stuff, but what is the best way to educate yourself on what is a good company? Tom's Academy. What do you mean? The best way to educate yourself what is a good company? Tom has an academy. Let me should bring it up on the screen right now. Okay, give me a sec. I will bring it up in a sec here, boys and girls. That is the best way. Like, there is no better way on the planet. I've worked with many experts, with many so-called specialists in that sphere of things, and I can tell you that the best way on the planet to do that is go to Tom Nash's Academy, Patreon, if you will. That is obviously www.patreon.com//Tom Nash forward. Well, that's it. That's all you need. Then you go upgrade if you're in the free zone, like myself. Oh, look at that. It actually, he still has now $35 spots for the Academy, which normally this costs you $100. I think it's because some people asked, and Tom was very nice to accommodate. Pardon me, boys and girls. So sorry. Normally this costs $100, and even that is just a ridiculous price. It's like somebody offering you a brand new Lamborghini for $100. At this price, it's just like somebody offering you a Lamborghini for a sandwich. Okay, it's like, you give me a sandwich and I give you my brand new Lamborghini. Okay, that's what it is. In some places, that's not even a shawarma. In fact, that's like a shitty shawarma. So that's boys and girls, where you learn how to properly evaluate a company and decide whether you should be buying all together. Yes, Nanny's just posted the links in the chat. Very correct. Very, very correct. You have the Discord, which is the Discord both of myself and Tom. We have a combined Discord, this together house, a duplex on the internet, if you will. And of course the Patreon link right below it. Tom Nash's Patreon link is right there below. Those who want to sign up now is a great opportunity, because normally it should be $100, that academy. It's super valuable. I participate in it from time to time, sit in the background, make faces and stuff, but it's great value. I cannot, there is no way for me to explain how great it is without sounding biased. That's just the reality of it. I realize that, but I'm serious. I've worked with many experts. What Tom does to me feels like he's a robot. I mean, I know he's not, but it's as close as it gets to a robot. Very true. Nanny's just wrote to you. Be very attentive. If you join the Discord, make sure you confirm the rules. Otherwise, you'll be stuck in limbo. You will only see the rules channel and will not be able to proceed into the Discord itself, giving you the actual value that we have. We have our members partition, which you can see right there. We have plenty of awesome members. Some of our members hanging out right there right now. I usually hang out with them right there in the open, or teach people right here. Of course, we have our members. Here is Tom's Academy, by the way, where you're going to have all the lectures and lessons and the links to the Zoom calls, which are basically the Zoom, the lessons. Here are the segment for my students, also just a little bit of stuff that they get extra on top of the academy itself, where I teach them how to properly do technical analysis, in-depth stuff, far more complicated stuff that we do here that requires hours to explain and teach. The discussions over geopolitics, finance, technologies, even tabloids we have, where we post various other creators. We don't mind, posting other creators and talk about whatnot, right? Shout out to all these awesome people. And that's it. Back to the market. And Chris So the Patreon I have at the moment is access to the premium Discord, but upgrade to Tom is for the Academy. If I understand you correctly, Chris, yes. If you are currently what is known Patreon VIP, is because simply the founders tier has already been closed. That was how it was intended to be. So there is no way to even sign up to it. It's just simply gone altogether. There's two tiers, very simple. You have your basic, which is what is known as Patreon VIP, right? Access to our Discord, the community, all the various benefits. And you have the $35 tier, which is only $15 higher. It's hilarious. Like, the pricing is hilarious. I guess we didn't give it enough thought, but we were trying to be as accommodative as humanly possible. It's only $35, and you get up to 4 Zooms a month, and you can rewatch the previous lessons, the lessons we did last year, use all the tools, catch up. Right now we're redoing. Tom is redoing all the lessons with a digital whiteboard and explaining everything step by step. It's phenomenal. It is like what the value of this sort of academy is. Outside in the real world, you'll have to pay up to 10,000 and north from that to get maybe in the best case scenario half of the value that you're going to get. But here it continues. Or in any other academy or any other sort of course, once the course is done, good luck, buddy, right? Here you stay part of a community. You always have access to Tom, to myself, to the rest of us. You can ask, rewatch, redo, re-listen, anything you need. That is kind of a unique thing. If you think about it, the value of the academy we have and the structure that we've built is in a way unique. It's not unique if there is no value. All these charlatans and bullshit in the internet. Ask our students. All you need to do is to ask our previous students. There is a reason why we basically have no, unsatisfied customers. Now, Nannies, have a great day. Thank you for showing up and being the legendary mod that you are. I tremendously appreciate your help. I don't know what I would do without you. I'm not even kidding. My life would be just horrible. That's what I can say. So much love. Much love to you, Nannies. Likewise, Nannies, you have an amazing day. So for right now, boys and girls, as much as we want to say that you see, I was right, the market is going down. No, that would be being impulsive, like I said, like the children are right now. It's good. It's moving in the direction we expected, but for right now, it's not the end of all things. We're just kind of seeing what we're seeing. We're going to continue observing it. Of course, we're probably going to have the live later today, which I will keep you updated to what's going on. Right now, the market is rather stable if you are, again, attentive to the targets that we spoke about. Even this, for example, NVIDIA, slightly down, but it's meaningless. By the way, I gotta give it to Palantir. Palantir is pushing up, right, while NVIDIA is pushing down, and S&P is not really being all that accommodative, so it just goes to show what you need to understand. This is like various different pipes and the different flows of things, right? So this pipe is subsequently affected by the other pipes. And if this pipe is able to push through the negative momentum that the other pipes are creating, that just goes to show how positive the momentum or the strength of this is. Because if the market would have been positive, this would have been far stronger. I would have actually said that 40 is possible. You see, like it's that important. And I'm not saying 40 is impossible. It's just that I'm gonna say that that's gonna be something that the market makers will take advantage against the average trader, against your average retail person, because they have a larger plan at hand and they see further than it's like a firefight. You've injured you were able to injure them by shooting them in the leg, but they don't mind that was on purpose. That's for you to lose your focus. Then they're about to overtake you because they have more ammo. right? At the end of the day, they have more ammo, they have more time, they look further. It's yeah. I'm not going to give you the analogies here with that sort of direction, but you need to understand that if this is a firefight analogy, they win all the time. They have a better gun or better guns and a lot more ammo and a lot more time, right? You're the one who's cornered, if you will. All right, well, boys and girls, I think we've run through everything. There's not really much to inform or update right now. Everything is rather stable and flat, kind of boring, I would even argue, to some extent. So there's not really much to see right now other than watching the market. It's like, almost like watching paint dry. We're gonna follow the S&P, of course. We've closed these gaps now. We understand we still have that gigantic canyon below us to close. I doubt the market will skip closing it, so get ready to see the market retrace back all the way to 5618. Then, of course, when we're gonna retrace to that area, I will bring you up to speed and we'll keep you up to speed as we make our way towards there. I don't think it's going to happen within the next 30 minutes or so, right? So it's going to take some time and we'll be able to follow up on this. But yes, my prediction or expectation is that the market will close this gap and will drop downwards to 5619 sooner or later. Sooner, in my opinion. That's it, boys and girls. I think we're done for today, right? I think, at least for not for today, for now. At least for now, we're done. And now we should all get ready because I am certain Tom is going to release or probably have released a video while we were doing all of this wonderful stuff. And we probably have some new interesting update to watch from Tom Nash, boys and girls, which, believe it or not, I'm still very much addicted and watch religiously. There are two channels I watch religiously, which is Tom's, right, and Fat Electrician, which I told you about before. Those are the two only channels I watch religiously. I don't have time nor the interest to watch anything else. Call me boring or whatever, but those are the two only channels. So I'm also waiting. Tom realized. Tom realized I don't know. I'm waiting. I was sleeping. I believe so. Tom needs to make. Looking forward for the next live, Greg. Thank you, Chris, very much. Tov Gever. Messi. Yeah, no, I mean, I don't know if he made a video, but I believe he probably will be having one shortly. And that's it, boys and girls. Love you much. Thank you all for showing up, finding the time of your day to show up here, sit around, hang out with me and listen to my ramblings and all that wonderful stuff. And I guess I'll see you on the next one. Peace out. Bye-bye.